Hi everybody, Boris Schlossberg from BK Forex. Welcome to our daily Forex technicals for 4/11/13. As everyone knows, there is a risk of loss in trading Forex, and therefore it's not suitable for all investors. We encourage you to pause and read the disclaimer for yourself throughout the video. Let's start the show. Well, the biggest story today is the Aussie, and I think the interesting story technically was this massive bullish reversal in the Aussie, which is happening right now as I'm speaking, basically. Aussie had a dip down. We obviously had very poor employment numbers. We dipped down, but very quickly recovered. And this is the key thing. Not only did we recover, we took out the prior day's highs. We took out the highs pre-event. And that's very, very bullish. Suggests that we may be on the path here to try to test the 106s. I wrote yesterday on the fundamental side that Aussie is just getting tremendous amount of flow from risk assets and essentially as a carry trade. And it's certainly being evident here technically. So this kind of reversal definitely bodes well for the pair. We'll look 106, however, comes up as a pretty serious resistance level. So if you go over here, you can see it as we pop around here. The 106, we actually failed here. I think this is the 105.97. Yeah, we failed right in front of the 106s and failed right below underneath it here. So there's going to be definitely a lot of back and forth here in front of this level. Having said this, though, if we can blow through 106, if we're at like 106.15, that definitely opens up the possibility for a run higher towards the 106.50, 106.80s. So how we trade around this level is going to be very crucial today if we can get up there to that point. Yen, again, fails to take out the 100 right now. Still staying very cautious. We probed the highs. We kind of matched the highs today and just came right back off it. We'll see how the North American session trades. Having said this, though, the failures at 100 are not bad failures because we are not backing off the price. As you can see, we're just basically holding well above 99.50, holding clearly above the 99. So to me, the yen 100 run really doesn't end until and unless we break 99s. If we take out 99s to the downside, that would suggest we have a near-term top and then maybe a little bit of a correction. Unless 99 is given, the press on forwards to 100 still stays in place. And then, of course, on the euro dollar, we had a trade-off up back down to 30.50. But again, also not a bad structure here. If you look at this on the 4-hour chart, you can see it better. We filled the gap, came back off it, but still hold above the gap fill around 30.50. And here, the euro trade here that's going to be of interest is going to be taking out the highs from yesterday. So 31.22s. If we can take those out to the high side, it really opens up the run towards the 31.50s, 31.75s. Having taken out those highs, though, if we can do that, there is still a little bit more resistance, just like in the Aussie. There's a lot of residual resistance here around the 131s. 130, basically around right over here, 131.17s. If we can take those out right over here, because we failed at 131.22 yesterday, then the run towards the 133s, which I think will surprise a lot of people, definitely opens up the possibility. So the euro looks relatively constructive and bullish in the morning European session. Aussie definitely looks bullish, having clearly reversed and taken out the highs. Dollar yen still holding up nice and tight, and even cable, which has been a laggard, made a big move so far this morning. Let's look at this on a lower time frame, and it took out the 53.50s, which is where we resisted just before. So now we're sort of playing around. We're at 65s. Again, looks relatively bullish because a move here opens up the move towards the 54s, and ultimately the recovery all the way out to 55s. So as we start trading here for the European session, all risk bid up. Everything looks very, very positive, and of course we can't really go away until we look at the Kiwi, which has been the star of the show. The Kiwi just blew out everything overnight. Continues to take out the 86s, 86.55s. A lot of reasons for it, both fundamental and technical. Carry trade out of Japan, possibility that maybe rates are going to go up in New Zealand to hold up the real estate market, and the fact that Kiwi bonds are now part of the Citi Global Index. All of that just put a huge amount of flow into a very, very tiny currency and has really verticalized the move. Having said this, though, this is kind of, I think, a very interesting proposition. The flow right now is clearly to the upside. You definitely don't want to fade it, but there will come a time, because remember, this is a very, very thin currency, where you're going to get some kind of a correction. And the correction here, given the extension that we've had here, the correction here could be 150, 200 points in a matter of a day, maybe sometimes in a matter of hours. 87 looks definitely much more toppy. If you go into the, I think you have to go all the way back. This is really, let's go back 5 on the monthlies, right? If you go back 5 on the monthlies, the last time we were at 87, what? No, sorry, it wasn't 5 on the monthlies. Last time we were at 80, 87, 88 was, is that right? Yes, I guess we were in the in 2011, and that is probably going to be the natural point where we have a lot more resistance here. So between 87 and 88 is where you're going to be facing a tremendous amount of resistance. Those who are willing to buck the trend, that might be an interesting entry point given the probability of where we stand right now. Anyways, that's how everything shapes up. As I've noted, please read the disclaimer. Forex trading is not suitable for all investors, and there is a tremendous amount of risk involved in trading Forex. This is Boris Schlossberg, over and out for BK Forex. I'll see you guys in my webinars.